Good evening, everyone. I'm very happy to see you all here, and I'm very happy to be able to present to you. I know you're all here because you're interested in your investment portfolios, you're interested in growing those portfolios. And an important input to that is what is happening in the economy. So I'm going to give you just a brief overview of what has been happening in our economy. So we do have quite a few things that are going well with our local economy, and I'm going to go through a few of those things. But as we all know, we still do have a number of challenges, and so I'll highlight a couple of them that I think and that we think impact on your portfolios and your investment decisions. Of course, we don't operate in a vacuum, and things that happen externally overseas also impact on us locally. So I'll identify a couple of those issues that may impact on us and then give you a bit of an outlook on where we see things going. So what's happening locally? Most topical right now is our short-term interest rates. We would have known that we're coming from a paradigm where interest rates were pretty high. As Carlene mentioned before, investment decisions were pretty simple. You place your money on a repo and you're able to live fairly well off of that. That's no longer the case. The BOJ's target interest rate is all the way down to 2%. Our treasury bill rates are below 2%. So you can see where we really have to work a lot harder to gain yield and gain returns on our investments so that they can work, our money can work for us, and we can have something that we really want to have. Interestingly, the US interest rates have been increased to 2.25%. So you see that Jamaican local interest rates are actually lower than US interest rates. And that's something that I certainly have never seen in my working life or even my lifetime. Canada is also increasing their interest rates. The UK is increasing their interest rates, whereas Jamaica is lowering our interest rates. And this is part of the government's expansionary monetary policy, where they are trying to prod the economy to grow faster. Growth has been something that's been elusive for Jamaica for decades. And I'll show you a little later that there are some rewards that are being reaped right now. Inflation is something that we've also struggled with. And in recent years, we've been able to bring our inflation down to single digits. In fact, up to last year or earlier this year, our inflation rate was on par with the US interest rate. But of course, certain things have fed into our inflation, and so our inflation rate has begun to trend upwards a little bit. That's not too concerning. The BOJ has adopted inflation targeting, and in fact, the inflation rate is within that target of 4 to 6%. And this graph just shows you the inflation gap, where back in 2013 we had quite a large gap, and that has shrunk considerably now. Our labor market is improving. It's not where we need it to be, but our unemployment rate has come down. It is in single digits, and this chart shows how the labor force has been growing. So in the past, you would say, okay, the unemployment rate is falling, but that's because persons are leaving the labor force. Not so in this case. Our labor force is in fact growing. Of course, it's not all good news because we all know persons that are leaving. We have been having quite a few persons emigrating out of Jamaica. So that's something we need to address. But still, we can't take away from the fact that our unemployment rate is at a historic low. Our growth rate is accelerating. The latest official figures from Statin show that we actually achieved 2.2% growth rate in the second quarter this year. And the projection is that by the end of the year, we may be around about 2%. We started off a little slow, but we have been accelerating, and we would all be seeing the developments happening all around us. and we can't deny that there are things happening on the ground. The traffic speaks for itself. Of course, the exchange rate is something that impacts all of us. The BOJ introduced their B-Fix-It tool this year, which has been stabilizing the foreign exchange market a bit. A couple of months ago, we saw the rate accelerating again in terms of depreciation, but it has revalued and is actually down below $130 at this time. And of course, with fiscal policy, we see where the government is really making an effort to contain expenditure, and the revenues have been trending above budget. So that's something that's encouraging for us, especially with the levels of our debt to GDP. In fact, the projection is that the debt to GDP will actually reach 100% by March. And so we are, in fact, on track with our 2026 target of 60%. You'll all recall that we're coming from a high of 140%, which is what got us into our IMF arrangement. So those are a few of the things that we see that are really positive, but a couple of things are still troubling to us. So of course, low interest rates are really good. It encourages investments and so forth. But at the same time, we are experiencing negative real interest rates. And that means that inflation is eroding the power of our interest. So that's something that's troubling to us. We had expected and wanted less volatility in our foreign exchange market. We have seen that there is still some volatility and unpredictability there, so that impacts on our planning abilities. Our current account deficit is expanding. We would expect a deficit, but it is troubling for the economy when that deficit is expanding. And of course, a big input to that is the oil prices, which we really don't have any control over. And of course, our growth rate, we're happy that it is accelerating, but it's still not where we need it to be, where we want it to be. So overseas, as I mentioned, interest rates are rising overseas. Our rates are decreasing. Oil prices are rising. That is impacting us in terms of inflation. It's impacting our pockets. The various asset classes that we invest in, equities, bonds, emerging market bonds, all of these markets are experiencing increased volatility and unpredictability. So you really have to be more discerning when you're selecting the investments that you want to invest in. And of course, we would all know about the challenges that Barbados has been having. Trinidad too is also having some challenges. So these are things that we have to be cognizant of when we're making our investment decisions. So what's our outlook for the economy? In terms of interest rates, we really think that they've hit a level where there's very little room, if any at all, to be lowered anymore. We spoke already about the negative interest rates, and that's not a situation that is sustainable. Inflation, we also expect to stabilize. The BOJ's focus on inflation targeting should help to keep it that way. And also, we think that all the factors together are laying the foundation for accelerated growth. And so that's a positive for our economy and also for the investment climate. With that, I'll leave you to our CIO so that we can see what are we going to do with this information.